conversation because I met most of you. So, first of all, good morning. Let's talk about healthcare. Now, this is one sector which fortunately is not dependent upon the current, shall we say, euphoria, nor is it dependent upon the potential being unlocked, based on a few things happening, because some of it has already happened. But if you really look at healthcare broadly, and then within that pharmaceutical specifically, within pharma there are really three streams for growth. The first, of course, is the domestic market. The second is the export opportunity. And the third, which is not spoken about much, but I do believe that it will continue to grow because it is a close linkage with economic growth, is OTC medicines. So what really are the drivers of healthcare growth? Now, at a very broad macro level, if you think about it, till about 5-7 years ago, Western Europe, United States, and Japan, which is roughly about 2 billion people, which is a third of the people on this planet, used to account for 84% of the pharmaceutical industry by value. But that doesn't make sense, isn't it? Because it can't be that 1/3 of the population consumes 84% of the medicines in the world. And out of which, the 300 million people in the United States used to account for 45% by value, growing at, double digits. Now, obviously something had to give. And pretty much like the consumer industry, something did give. So it started with Europe. It started with Japan, really, followed by Europe. And now we're beginning to see signs of that happening in the US. So first of all, people always used to believe that the United States would continue to fund healthcare innovations around the world. Now we are beginning to see signs that that's no longer the case, because in the case of the US, 17 to 18% of their GDP is spent on healthcare. Consider that in India it's 1.5%. And that's overstating it. The public spend, the overall spend will be about 4%. So again, something had to give, and clearly I think the United States is not willing to pay for innovation, and we are seeing signs of that. You must have read in the press that the Congress has instituted an inquiry against price increases by some generic players, not even innovative players. So the US is slowing down, Europe is in decline, and Japan is more or less flat. But what is growing is this part of the world. And within that, it's really, there were three of the BRICS which were really growing rapidly in pharma. And then now, more recently, with oil prices sort of slowing down and with their internal challenges, Brazil has slowed down. So that leaves China and India. And China really has begun to crack down on prices of medication as well. And we've been one of the victims, so that we put it on the table of that. So that leaves India. Now India, for the last, between 2009 and 2012, the market grew at something like 12.5, 13%. And even now, over the next 5 years, it's expected to grow at about 11%. Much of it has happened because some of the value has been taken out by the NLEM price cuts which happened last year. So by any yardstick, that growth is not small on an industry which is about 85,000 crores and expected to be $20 billion in the next 4 years by 2018. So as far as growth is concerned in the Indian pharmaceutical industry, no matter which way you look at it, this growth will continue. There will be ups and downs. There will be years when value growths will be lower, but there will be years when value growths will be higher. And what are the drivers of this growth? So first of all, the industry anecdotal estimate is anywhere between 40 to 60% of the population in this country has access to healthcare. Now, if that is true, one of the elements of economic growth, which we are expecting big time over the next 4 or 5 years, is the trickle-down effect. But unlike the consumer industry, where media precedes consumption, media and distribution precedes consumption, in the case of pharma, it's the infrastructure which precedes consumption. So I think much of this has already begun to happen with the investment which has gone into the rural health mission which the earlier government had put in. And more recently, I think the new government has made a number of leading statements on their intention to provide health healthcare to the country. And much of it will be to the 65% of the population. So that part of the market will grow and will drive growth and will continue to grow. So the bottom end of the market. At the top end, you have this phenomenon where, unlike the West, there is no reimbursement. So people have to pay for healthcare out of their own pockets. And therefore, the ability to pay is a function of two things. It's a function of economic growth and how many people have employment in the organized setting, and therefore they have healthcare cover of some kind. And the second, of course, is health insurance, which, as you know, since 2000 was opened up and has been growing at 30%, galloping at 30-35% a year. So as more and more people have personal cover of some sort, the demand for quality healthcare goes up. And you see that in the mushroom growth in hospitals, which has come up in the last 7 or 8 years. And that growth will continue. It will percolate down to tier 2, tier 3 towns, but the demand for quality healthcare. So at the other end, you have a situation where demand for quality healthcare will continue to grow. The third is, as lifestyles become more westernized, the disease burden changes. So from more communicable diseases, you start going to more non-communicable diseases. So, and therefore, in the Indian pharmaceutical industry today, because the tracker really focuses on the top 300 towns, the fastest growing therapy areas are diabetes, cardiovascular, cancer, CNS, all of which are sort of chronic ailments. So that's going to be the other piece which will drive growth. And then finally, I think the whole preventive medicine area, again, the Prime Minister has spoken about it, which is really vaccine, which is where we're big in a sense, is again even less penetration than pharmaceuticals, because the maximum, the birth cohort in India is about 2.5 million kids. The maximum penetration, 25 million kids, sorry, the maximum penetration of any vaccine is about 7 million. So that gives you an idea of the opportunity you have for vaccination in this country, and that market is growing even faster than the pharmaceutical market. Finally, if you focus on the OTC piece, that whole area has been very muted, because typically as education and incomes grow, the tendency to self-medicate increases. Now, unfortunately, in India, the legislation around OTC medication is very confused. So there is a Schedule K in the Drugs and Cosmetics Act, which is not clear at all. There is a Magic Potions and Remedies Act, which deals with advertising, and therefore that is not clear. So that whole area has not grown. But it appears that that is going to be addressed by this government, because they have now started looking at the Drugs and Magic Potions and Remedies Act and sort of revamp that. So once that gets done, that will unleash the growth on the OTC side. So really, if you look at all the three pieces, you know, the stars are well aligned for the industry to keep growing I won't say strong double digit, but certainly double digit for several years to come. On the export side, we are not big in it, but again, because healthcare budgets around the world are being constrained significantly because of low economic growth, in fact shrinkage in many cases. So the government's ability to spend on healthcare is reducing, and therefore their focus on generic medicines is likely to increase. And given that, I think the export opportunity for the Indian pharmaceutical companies will continue to grow. So that's really an industry snapshot. As far as GSK is concerned, we've been here for close to 90 years. We've led the industry for many years. GSK is probably the only company where their business in India, between the pharma and the consumer piece put together, is significantly bigger than the business in China. And therefore you can well imagine the importance that India holds for the parent. We have made announcements even before this government and Make My India came in of investing about 900 crores in a new greenfield facility. The first multinational pharma company to do that. In February we made that announcement. We have joint ventures in vaccines. We do a bit of fill finish of vaccines in India. That's a big piece for us. We have patience. We are here to stay. We invested $2 billion last year, $1 billion in the pharma side, $1 billion on the consumer side to take up stake, showing the intent of the parent. So I think India is an important piece for GSK and will continue to remain so. So with that, I think I'll end my initial remarks and take any questions that you have. Thank you.
Thanks, Dr. Joshipura. With that, we'll start with the Q&A sessions, and I'll start with a few questions and then make the floor open for the Q&A. So how do you see the future prospects of Indian pharma industry described over there, but where do you see the opportunities going forward?
All the places you just said, which is that, see, typically people believe that, it's the chronic spaces where the opportunity lies. That's not true, because the only reason why it doesn't get picked up is because it's not covered effectively by external trackers. But for the reason which I outlined, I think growth will come at all ends of the market and at all value points, because as public spending on healthcare increases, the government will keep buying. So at that end, also the opportunity lies. And equally, I think because of the reason which I outlined, that people have more money to spend on quality healthcare, that end will also grow.
So recently, GSK went into a multi-pronged transaction with Novartis. What kind of a medium to long-term impact does it have on GSK India business, and in particular in the vaccine business, which we acquired from Novartis in this process?
Yeah, so we have an oncology business which will get transferred out, which is about, this year should be about 75 to 80 crores. On the other hand, GSK India will get the Ravipool business. The modality of it is still being worked out, but certainly it will be with GSK India in terms of managing it. So it's value accretive because it's about 120 crores as per IMS.
Augmented.
The OTC part of that transaction doesn't apply to us. So.
The Augmented has rebounded sharply post the price cuts imposed in 2013, and the volume gains have more than offset the value loss in a short period of time. This is an incredible achievement. How did the company face up to this challenge and manage to overcome this?
No, we had expected this because so even before the NLEM came in back in January 2013, we had put a plan in place to make sure that we're able to leverage the price cut and thereby get a significant increase in prescriptions, which is really what has happened. And therefore, if you look at the external trackers, because we were at the maximum impact in terms of NLEM, we are at an all-time high in terms of prescriptions being written for GSK products.
So structurally, Augmented's sharp rebound is indicative of how big brand can stay resilient in face of a price cuts and edge out smaller brands companies. Could the whole new pricing policy may end up being a trigger for consolidation in the Indian pharma industry?
Well, I don't think it's the price cuts. Consolidation will happen anyway. It's a matter of timing. We'll have to see as and when it happens, but certainly consolidation will happen, is my view. Because well, there are a couple of reasons for this. One is, of course, the change in the intellectual property regime, and therefore the business impact on the domestic business model. The second is, I think we will import quality standards. So as the export component of our business keeps growing, we will import some of the quality standards which developed world has. And when we do that, the need to invest will go up. And therefore, smaller players will find it more and more difficult. So I think eventually you might end up with a situation where you have a few large players and a number of small players. But timing, of course, nobody can predict.
So coming to the vaccine business, how does this Glaxo view this opportunity in India? Will it primarily remain a private market play, or do we see public market becoming an important component of this business? Will the government's increasing healthcare spend intention have a positive rub-off on the vaccine market in general?
No, vaccine, of course, will continue to grow, as I said. And the Prime Minister actually spoke about preventive health being an important element. So their vaccines come in. And I think the first thing they did was announce the introduction of 4 new vaccines in the public vaccination program, which since '87, there's been only 1 new vaccine. So I think that tells you about the intent and their understanding of public health. But the private market will continue to grow because in India, anything which is in the public domain is seen as, and this is a perception, it's not the reality, but it's seen to be of a lower quality than something which is private. So the moment somebody can afford to get into private, they will get into private. So therefore, I do believe that notwithstanding the expansion of the public vaccination program, because people will upgrade from there, that end will also grow, and it's good for the vaccine businesses.
And coming to the institutional business, how do we see the opportunity of this business given the prolific growth in the private sector healthcare services? How is Glaxo placed to tap this opportunity?
So we saw this coming, and therefore we put in place teams which specifically focus on tendering and so on and so forth. And that opportunity is really twofold. One is, of course, threefold: hospitals, private institutions, and then government buying. Different values and different valuations. But in terms of volume, those are significant opportunities. Certainly for mass market products.
Okay. Now, talking about the consolidation in Indian pharma sector, we have been seeking brand acquisitions but have refrained so far. Are we seeing any moderation in valuation expectations?
Don't know. Because we've not been in the market, so don't know, so nobody comes to us.
Okay, so with that, now I'd like to have the floor open for Q&A from any of the participants over here.
Yes, sir.
Please introduce yourself before you put up your question.
Yeah, this is Arpit from UTI Mutual Fund. Just wanted to know your perspective on generic as a segment in the domestic pharma industry, and do you think that it can potentially become, let's say, 30-40% of the market?
See, generic, I mean, if you look at one of the trackers, AOCD AWACS, I'm sure you've been exposed to that presentation. They believe that generics have actually detracted from the value in the Indian pharmaceutical industry. So while we are not in that space, there is room for generics, there's no question about that, at the bottom end. And therefore what will happen is that the bottom end growth will get appropriated by generics. The room for branded generics will never go away. So despite everybody's sort of statements that they want doctors to write only generic names, etc., because of the need for reassurance of quality, branded generics will continue to play a role in this country. And you cannot get away from that. And I think eventually people will understand that quality is not a given, and quality is a cost. Today, if you look at the way NLEM is constructed, it equalizes everybody to one price. And there's an implicit assumption that the cost of manufacturing, the cost of quality is the same for everybody. Now, that's not true. And at some point, I think there will be a realization when you have instances of the kind we had in Chhattisgarh, etc., that you cannot equalize quality, and if you don't want to equalize quality, there is going to be a cost to it. So sorry for the long answer,
but then if you're saying that a part of the low-end growth would be driven by generic, so let's say tier 3 to tier 7, do you think that will become more of a generic market, and the urban centers and the top cities would be restricted to a branded generic space? Would that understanding work?
So there is a question of affordability, which is not necessarily geography related. So it's an income segment, and that's it's the people who are entering into the fold of medicine. The new entrants are the ones who will, I presume, will use generic medication.
Hello, sir. Vishal Shah from Aadhaar Partners. My question is, how do you view the constant regulatory intervention in the industry? So last year we saw the NLEM list. This year also we had few pricing orders, and there are news that a new committee has already been set up to revise the NLEM list and perhaps expand it. How does this impact your long-term strategy of doing business in India? And do you think these price control measures actually serve the purpose of improving the healthcare access in the country?
Yes, so it's true that there have been a number of regulatory interventions in the last year or so. But what you also have to realize that there was no pricing intervention since 1995. So 2013 was the first intervention after 18 years. And that's a long time. You cannot get away from the fact that pharmaceuticals the world over is one of the most regulated industries, like financial services now. And that regulatory pressure, stress and pressure will remain. Number two, the pressure on pricing is again a global phenomenon, as I mentioned. In India, I think the good thing that has come with the last year's intervention is that we don't have to keep going back to the government to seek price increases. Because under the earlier DPCO, you could never get a price increase. Here, it's automatic based on the wholesale price index, as you know. So there are some good parts, there are not some good parts. You've got to manage your strategy based on that.
But when it comes to introducing new drugs and maybe patented drugs into India, does the thought process change from the parent perspective?
Not for us, it hasn't.
And just on the vaccine, that has been a strong growth business for you. Is there any possibility of regulatory intervention in the vaccine part of the portfolio?
I don't know. So far there is none. And I don't see any mention of that either. So probably not. Not in the near future at least.
And just on the price control thing, as it was mentioned that you have gain significant volumes on Augmentin, and it looks like with the price hikes every year as per WI, it might actually play in the favor of MNCs with strong brands, the price control measures. Do you view it also in the same way?
I don't know, but it worked for us.
Thank you.
My name is Rushabh Sheikh. I'm from Karma Capital. Yeah. I just sort of taking clue from him and just extending the question.
We met, haven't we?
Sorry?
We met before.
Yeah, of course.
Yeah.
Just taking a clue and extending that question that, is this NLEM is actually going to push consolidation? Because, as he said and as you've experienced, price cuts are actually accelerated brand sales for you, I'm sure, for a few other players as well. And do you see this, say the top 10 or top 20 players from the X market share will anyway, because of these changes or interventions, are going to go to X plus whatever market share, and they're going to put pressure on the remaining, at least the bottom end of the industry, and sort of push consolidation. So actually this NLEM is actually playing in the hands of the larger players and pushing consolidation, which is what exactly reverse of what the government actually wants.
See, I don't know whether this is, when you look at healthcare, I don't think it's only economics, okay? So I think when the government looks at this, they have to also factor in mind that they have to ensure or ensure availability of quality medication. Therefore, this whole pricing business based on pure economics and small players wanting to grow, big players not growing, I don't think all that is relevant as long as for the products that you are looking at, is size an important consideration when it comes to delivering quality? If it is not, then I buy your logic. But if it is, then it's good that the bigger players do well.
That's what I'm saying. That's what is starting to happen. I mean, you're just seeing first here, so it's very early stages, and we don't know what the interventions will be going forward. But this seems to be the case, which is what is happening. That the bigger players will get bigger and bigger. If you actually continue to push price control and push prices down.
See, I don't know about, I'm not sure. That will happen anyway. That will happen anyway because, as I said, even if you don't have price control, and the point I made that we will import quality. Now, if you import quality, then your cost base has to go up. Now, if your cost base goes up, there is no way that and if the quality benchmarks of the regulator go up, there is no way that the smaller players can remain in, but the medium-sized players, the smaller players will still remain, can remain in the sector. And therefore, you could see a polarization going forward, but based on these assumptions, that the quality standards will keep getting raised, the bar will keep getting raised.
That's my last question to you, right? Do you see the domestic quality standards now being pushed up in lieu of, say, what happened in Chhattisgarh or what's, we have seen a lot of other instances? Do you see that the local quality control standards will be pushed up generally across the industry by the government?
But that should happen. The question is how soon and how fast. It's a part of the evolutionary process of the industry and the regulation. Difficult to predict how quickly it will happen in this country. Oh, that's inevitable.
Any other question from the floor?
I've also read about GSK's differential way of incentivizing sales. How has that played out in India? Do we have now sufficient evidence that economically it would be now feasible to to implement that, to execute that?
So we were one of the first countries to put this in place in January of this year. Difficult to isolate the impact of this alone from the other things which have gone on, which is the price cuts and therefore the impact of that. But we don't see any gross negatives arising out of this as yet. We'll keep watching it obviously over the next couple of years. But as yet we don't see any gross negatives coming out.
Globally, has the experience been any different?
Well, they've been in the US for 3 years. They tell us that it's actually gone down well. I don't know. But clearly, I think unless their experience was positive, they would not have rolled this out across the globe, isn't it?
Has anyone else emulated you in this?
No.
And if not
to my knowledge.
Why would you think that if it were feasible for you and therefore you continued it for 3 years and others are looking at it and not emulating that?
Well, you need to ask Andrew Whitty there. Here I can tell you, we've always done things different. That is not, and you can see from the last several years, that has not been to our detriment. It positions you differently, which is not a bad thing. In any case, we are not a mass market player in the sense of being present in every possible therapeutic area. If we were, then it would make a difference. But because we are a strong branded generic player, therefore we can be different and have a different position in the minds of our customers. That's my view.
The proportion of patented product sales on an industry-wide basis is much lesser than what McKinsey projected in its celebrated report. For you as well, as if I understand, is less than 5%.
Oh, of course, yeah.
Is that the way you planned that out earlier, or are you disappointed with that, and are there any learnings from that?
No, we're not disappointed. In fact, for the last 7 years, whoever was asking, I was telling them it's never not going to be more than 1 to 2% of our portfolio in the next 5 years, or 5% at best. So that we knew. But it's not patented alone. You look at vaccines, for example. There are no patents there, but it's not possible to replicate those products. So in a sense, you have exclusivity, if you will. So if you consider that, then our portfolio with exclusivity of some kind or the other becomes much bigger. And that's not necessarily a legal exclusivity, that's a technical exclusivity.
Any other question? So there are no more questions, then are there? Okay.
Couple of things. We used to be a mid 30% EBITDA margin business for a while. We've had a bunch of setbacks over the years. I mean, strategically, where do you see, directionally, where do we coming back or closer to those profitability levels going forward?
See, I really can't say that because it will depend, much will depend upon the wholesale price index and our ability to take up pricing. We had 6.5% last year. Currently, it looks like sub 2%. So much will depend on that, and therefore it's difficult to call. And therefore, I don't give guidance on margins anymore.
But in the business, I mean, what's going to be the driver for growth apart from these pricing gains that's going to come through? Structurally, what else could be the...
Structurally, look, our field force is the benchmark productivity in the industry in terms of sales per man per month. We have negative working capital. Our cost base is really, really tight. So, but there's not much headroom there to cut costs. So the only other way it can come is either through leveraging volume and improving the productivity of that cost base, or pricing.
Secondly, you mentioned about the 900 crore investment that GSK has committed. I mean, this is quite against the grain again. You've done a lot of things very differently. This is probably one more example of that, the way you do business. But what was the...
Sorry, I didn't get that. What did you say?
The domestic manufacturing plans that you have for 900 crores of manufacturing investments. Not too many MNCs have really gone that path in terms of setting up investments in India. So what was the driver for GSK to start?
Very simple. No other multinational has our volumes. We account for 28% of GSK's worldwide volumes. No other multinational has that kind of volume base. So that's one. Number two, we do want to make sure that we secure supplies as we go forward, because capacities may not be available, and if capacity at a premium, then we would then become hostage to. So we don't want that situation. So therefore, we want to keep reviewing the balance of what is outsourced and what is made inside.
Lastly, you did mention about the way branded formulation is going to play out among the well-off segments. So are we going to see a trend where branding, obviously advertising is not allowed, but a quote-unquote a branding, a corporate branding and stuff like that will become incremental?
No, not corporate branding. But you see, when you go to your doctor and if he thinks you can afford, he will always write a premium branded medication for you. You check it out yourself. So that's the way to work. It's not corporate branding in that sense, no. It's but because it's the doctor who prescribes, and if he is convinced about the quality and the efficacy of your product, so that's what branding in pharmaceutical is all about anyway.
So to the extent the brand building initiatives with the doctors, is it going to be a differentiator in terms of how firms really, how the growth really growth differences play out across different companies going forward?
You can see the example of Augmented.
That's a fair point. But just you mentioned augmenting, what exactly did you start to do differently than you were not doing earlier? Which
that of course, I mean, whatever we did, it has worked.
Okay, thank you very much.
For that, I'll have to charge you consulting fees here.
I think, Dr. Joshipura, I have a question in relation to your initiative of putting up $900 million on the ground here. So, and you said that the reason being that you have a large domestic market, others don't have it. But are you contemplating this facility to be export-oriented unit also?
Not at this point in time. I mean, I'll never say never.
Right.
But that's not the intent with which we have put it on.
Right, right. But what is it which is actually inhibiting other MNCs to really use Indian base? We have a very good intermediates market, we have other producers. The cost of manufacturing is low. In the past, IPR issues were the major challenge in their mind, but what is inhibiting now?
There are also political sensitivities. So, every country wants to have a dedicated facility in their country. Then there are issues around whether Indian dossiers are acceptable everywhere or not. I believe they are, but so I think there are many. It's not just a slam dunk about why don't we make India because it is the least cost base. There are many other issues which come in here.
And do you foresee the Indian pharmaceutical industry to continue to grow in the export markets?
Oh, absolutely, absolutely.
And catering to the African market, is that a kind of a constant strategy by any other, in your scheme of things, or in general industry?
We don't do it. We don't do it. Of course, I mean, that's an opportunity, even for multinational. But the Indian companies, certainly, I think we are the pharmaceutical world. It's the second biggest source of exports after IKEA. You guys know all of this stuff. And I see no other solution. I see no other competitor with that level of scale to be able to substitute Indian pharmaceutical companies in the global markets. And of course, the experience of having served, difficult markets like the United States and Europe over so many years, and the expertise that the Indian companies have developed.
So structurally, as an industry, I think we are different in terms of spending our budget on R&D vis-a-vis the various developed nations, and still the number of patents which we garner is still minuscule probably in comparison to what gets garnered by the outside India. So what can you suggest the industry should be doing to correct this situation or move towards at least a situation where we ourselves are in a position to garner more patents?
See, I think there are a number of a few players who have embarked on this journey. Getty's, Glenmark, Sun Pharma, Ranbaxy did when they were standalone. But if you want to really make this a holy grail, then you need, like banks, you need capitalization of a different order of magnitude, because the risks associated with research and the rewards equally are very significant. And if you are not well capitalized, failures can wipe out the company. So then you need scale.
Scale as well as probably the VC funding coming into picture. Any other question from the floor? Let's go ahead.
You just mentioned something, it just struck me. This Ranbaxy Sun merger which is going to come through now. I mean, how do you see it? Does it have any sort of a disruptive impact on the market, or these are two complementary businesses which will sort of continue the way they are?
See, this has been a fragmented industry anyway. So, competition is a given. I don't think, therefore, that is going to alter the dynamics in any sense. But obviously for Sun, it gives them expertise of a different kind. So far, they have been focused on certain therapy areas, and this gives them, a leeway into the kind of therapy areas which are more mass market, which they haven't been before, with the same level of scale and complexity.
With that, thank you, Dr. Joshipura, for being with us this morning and your insightful learnings which we had from you. Thank you. Bye.